Corporate earnings are out and the PSEI managed a small weekly gain. Let's look at why this could continue this week and why I'm also cautious on the US markets for 2025. Let's discuss. My name is Dan Slim and welcome to another episode of Monday Market Outlook. Earnings results are underway. Let's start with some of our favorite names. SMPH. As I mentioned, really more about the mall operations than real estate, and it looks like consumer spending is healthy as SMPH reported better than expected numbers. Net income up 14% year-on-year to 45.6 billion ahead of the 44.9 billion consensus. Q4 alone was up 19% on a year-on-year basis. Despite property headwinds, the residential business still grew 19% year-on-year and even other revenue surging 25%. With this, SMPH is now trading at a whopping 3.2 standard deviations below its 10-year mean. Meanwhile, the surge in consumer spending on SM coincides with the results from East West Bank reporting net income of 7.6 billion, up 25% year-on-year, which represents the highest net income ever for East West Bank. Metrobank revenues above expectations. Full-year revenues were at 48 billion. That represents a 14% growth. Metrobank's loan growth, 17%, is the highest among East West, BPI, and Union Bank. No dividends were also declared at 5 pesos per share. This is 6.9% dividend yield, the first payout of which will be 350 with an ex-date of March 6. Now, banks could also get a boost this week as the BSP announced late last Friday a 200 basis point reserve ratio cut, which will take effect on March 28. Let's see how this new development affects Q2 bank earnings. Banking stocks extending their run despite the easing cycle. In contrast to the banks, and in contrast even to SMPH, Ali reported a net income of 7 billion, up 15%. But the problem here, residential revenue only grew 4% in Q4 compared to the 35% in the first 9 months. Now, while a lot of analysts were saying that the higher-end residential segment wasn't affected by the condo glut, this slowdown confirmed the bearish reports on the property sector. The excuse from management was that most of the projects were completed at the later half of December when most potential buyers were already busy. Management cited strong performance so far in the first half of the first quarter. That remains to be seen. So for now, other property stocks could experience further weakness, especially if their earnings report shows the same slowdown. Now, car sales in January grew 10.4% with 37,604 units sold in January. The actual growth rate might even be higher as BYD, the market leader for EV, is not included in Campi's numbers. Of course, car sales are tracked because they represent business activity in the economy, especially when the commercial vehicle segment is driving the growth. Toyota, meanwhile, is still leading the pack with a 12.2% volume growth last month and maintaining its dominant 48% market share, with the rest of the industry growing at 8.8%. Let's hope this development helps GT Cap, right? STI Holdings, one of our favorite momentum stocks this year, clocking in a 30% growth in net income, up 641 million, and ROLI surged to another record high, increasing 15% from the previous year. Its trailing PE ratio is at 7.2. We have a price target for STI at 170. On other earnings last week, FCG, Figaro Coffee Group, now called Figaro Culinary Group, posted strong numbers. Net income is at 222 million in fourth quarter, up 14%. Aggressive store expansions, 216 stores open in 2024, outpacing IPO expectations. But the acceleration in store opening may have cannibalized existing stores because same-store sales growth dropped 13%, which dragged the stock down last week. Meanwhile, A-REIT posted total revenues of 10.3 billion, up a whopping 44% growth from the previous year. Ayala Land has also approved a property share swap agreement, which will boost A-REIT's assets under management to 138 billion. Dividends were also declared at 58 cents with an ex-date of March 5. So, let's look at the PSEI charts. The index went sideways last week. We mentioned the possibility of price action along the 61.50 to 59.30 range, and we are so far tracking this movement. No? The market may still be in cautious mode as we await another potential disruption this Feb 28. So we could continue moving sideways this week. Eventually, the 20 EMA here will continue to squeeze price action, and whether it breaks to the upside or to the downside would depend on how the MSCI rebalancing plays out this Friday. Best case scenario, we squeeze to the upside, test 6,300 zone, pull back to test support. Now, scanning through the index names, which could give us a clue on how the index will move in the next few days. SM, range movement along 826 to 774. We've been here before, right? So hopefully we bounce back for another attempt at 826. Remember, the index needs SM to lead the rally if it has any chance, no, of reversing the downtrend. Meanwhile, AC showing a better basing formation. We've been in this level before. 1, 2, 3, 4, 5 times, or one could look at this as a triple bottom. It is now testing the 570 resistance level. Watch out. If AC will be able to break this to the next resistance level here, this would confirm the breakout of this formation, and we could get a short-term reversal in trend. Not only SM and AC, but some of the index dogs are already showing signs of recovery, which is good news. If we look at AEV, right, double bottom, it has managed to rally back into the 50-day EMA. It has been there before. It can fizzle out, but hopefully, let's see if it can maintain this level. But of course, historically, it has failed that level, so we'll see, right? JGS also showing signs of life here. JGS last week already surging more than 20%. It could pull back to the 20 EMA, a retest of support before another rally, which could form a higher low and then move on to test the 20 peso level. Things looking better, definitely, for JGS. And not only that, I mean, one of the most battered stocks this year, URC, finally showing signs of life. Look at the gain from last week, also up 18%. URC entering the party. Things are looking much better for URC. It has broken through the 50 EMA. A retest of support would be ideal, or maybe even the 20 EMA, and a bounce off of that could continue the rally up to 80 pesos. What could drag the index down would be Ali and SMPH. SMPH, despite good earnings, keeps getting pulled down by negative property news. Downtrend here still intact. Ali also, downtrend still intact, struggling to break through the 20-day EMA. Now, among the banks, BPI showing resilience here. This is your classic breakout, retest of support. So far, holding ground here at 128. If this continues the bounce here, it can confirm the rally up to probably 139. Metrobank also showing signs of life. We have had a higher low, higher low, higher high, higher high. So we now have a short-term uptrend for Metrobank. Hopefully, Metrobank could get a boost from the dividend announcement. The ex-date would be on March 5. Let's look at ICT, the second heavyweight, hanging on to dear life at 345, currently struggling to move up the 20 EMA. Best case is to form a basing pattern along 340 pesos, hopefully to get some buyers in. Now, utilities, our favorite sector so far. Aboitiz Power, pull back in time, wait for the 20 EMA to catch up and see if it can hold that support before buying. Manila Water, brief encounter with the 20 EMA, bouncing off. They will be reporting earnings soon. Guys, watch out for dividend announcements for Manila Water, right? So next we have Globe and PLDT. Still some good areas to enter. We have a breakout and a retest of support. Good chance to enter. Globe also consolidating here. The 20 EMA already catching up to price action, could be ready for a breakout very soon. Converge, touching the 50 EMA. We've been there before. If this bounces off, this could confirm another rally towards 1846. Lastly, STI Holdings, it is currently supported at the 20 EMA. Let's hope it doesn't break the 20 EMA. If it bounces there, could be a good chance to enter STI, right? So let's now go to the global markets. A quick look at the S&P 500. Woo, look at that. The index finished the week in the red after Walmart earnings report last Thursday sparked a broad market sell-off after the company cited tariff uncertainty as one factor that could impact consumer spending moving forward, right? So price hikes for electronics and general merchandise would likely be passed on to consumer if tariffs impact the retail giants. Bottom line, now the S&P 500 did, however, hit a new all-time high before the market realized it could be in for another surprise in the coming week. Now remember, Trump's original deadline, February 1, for the 25% tariff on Mexico and Canada, briefly unsettled the markets right here before a one-month extension quickly eased concerns within 24 hours. But since then, many strategists have considered these tariffs more of a negotiating tactic, than a policy that investors should factor into market pricing. But as the 30-day extension nears the early March deadline and updates on additional tariffs continues to emerge, investors remain wary of the potential for another market surprise. As a result of these uncertainties, even the 10-year yields dropping 2.5% in the last 3 days to 4.431 after reaching a peak of 4.8. The DXY also weakened to 106.64, breaching the 100 EMA support. Going into March, I'm cautious on the US markets as record assets in leveraged funds brought about by easy access to margin accounts have pushed this figure into record highs never seen before. And the problem with leverage is it's dangerous, especially for retail traders. Right now, 42% of US households are invested in equities. Historically, the markets will test the 200-day moving average at least once every year, and 3 out of 5 times this has happened in the first quarter. So imagine what will happen to those margins when the S&P 500 dips back to the 200-day moving average, right? So far, the stats point to a possible messy year ahead. We've had our run in the US markets, and it may be time for the markets to digest these current levels. As investors flock to gold, look at what's happening to the dollar. We're seeing dollar price action track very closely to Trump's first term in office. Could we be headed for dollar weakness this year? Which, of course, will be good news for the China markets. So for this week, it will be a busy Friday. So investors could be on caution mode until Friday. MSCI rebalancing and the balance of trade numbers for the Philippines, the Fed's favorite inflation gauge, the core PSEI index, will be on tap before the market opens on Friday. So it's another wait and see week. Monitor some of the index dogs because the index needs their support to get us back into rally mode, right? So In the meantime, just be patient, right? So that's it for this week. Please like this video if you found the information useful. Please subscribe to the channel for more updates. And again, good luck on your trades. Please manage your risk accordingly. And I'll see you again next week. Bye-bye.